Hey everyone, welcome back to Corporate Decoder, the place where we dissect company filings so you don't have to. Today, we're diving into BigCommerce's latest 10K, their annual report. Buckle up, because this report is about to take us on a roller coaster of strategic shifts, financial juggling, and maybe just a hint of everything's fine vibes. Let's see what BigCommerce has been up to behind the scenes, and what it all means for their future. First off, this is a Form 10K, which is basically the ultimate annual report card for publicly traded companies. It's way more detailed than those glossy annual reports you might get in the mail. This is where they lay bare the details, risks, and opportunities. Our period end date is for December 31, 2024. Alright, right off the bat, BigCommerce says they offer professional-grade commerce solutions helping businesses thrive. In simpler terms, they give businesses the tools to build and manage their online stores. They mention a team of brands including BigCommerce, Feedonomics, and MakeSwift, and these work together to give their customer base a flexible experience. Let's talk about their customers, and BigCommerce divides them into three segments: business to consumer B2C, business to business B2B, and small businesses SB. They try to provide specific solutions for each of these segments. A key area of importance for BigCommerce is composable commerce, and they see it as an integral part of their portfolio, and that their architecture will enable customers to leverage best-of-breed technology. To simplify things, BigCommerce created Catalyst. Think of it as a starting point for businesses to quickly build online stores. It enables companies to launch a fully optimized storefront in just one click, streamline workflows, and go to market faster. Also, the company says they're proud of one of the deepest and broadest ecosystems of integrated technology solutions in the e-commerce industry. They strategically partner with leaders in areas like payments and shipping, rather than trying to compete with them. Now let's brace ourselves for the risk factors. This is where BigCommerce outlines everything that could go wrong, and it's a lengthy list. Let's go over a few of the more important ones. First, they admit they have a history of operating losses. They lost $27 million in 2024. While that's an improvement from almost $65 million the prior year, it's still in the red. BigCommerce is focusing its sales and marketing efforts on enterprise accounts, and a lot of their business depends on their ability to pull this off. They might face greater costs, longer sales cycles, and unpredictability. There's a lot of effort involved in focusing on enterprise accounts. They also mention the risk of losing key members of their management. Basically, if their star players leave, it could hurt their ability to attract talent and grow. Another big risk is cybersecurity. They store tons of confidential information, and if there's a data breach, their reputation could be toast and they could face major fines. They also depend on third-party data centers. If Google or Amazon services go down, so does BigCommerce, potentially resulting in customer dissatisfaction and loss of revenue. And here's an important one for us to discuss. The report mentions that they identified a material weakness in their internal controls over financial reporting. This means their ability to report financial information accurately could be compromised, causing investors to lose confidence. It's like admitting they have a hole in their accounting system and they're trying to fix it, but who knows if it'll be enough. They also need to keep their brand strong. If they don't, they won't be able to attract new customers. Plus, they need to offer high-quality support, otherwise customers will leave. Finally, they are subject to evolving global privacy laws like GDPR and CCPA. These laws could limit how they use customer data and increase their compliance costs, and it's a real headache trying to keep up with it all. On the subject of global operations, the ongoing Russian invasion of Ukraine is a point of concern that could result in instability in global markets, affecting their employees, customers, and partners. Alright, with the risks laid out, let's move on to the financials. It's where they break down the numbers and try to explain what's been happening. Again, we need to read between the lines here. Let's scroll over there. BigCommerce organizes its customer base into three categories. These are business to consumer, business to business, and small businesses. Total ARR, or annual recurring revenue, is the main key metric, and they hit approximately $350 million. Enterprise accounts, those with bigger contracts, are the main focus, representing 75% of the total ARR. They need to retain their accounts. Net revenue retention for enterprise accounts was 99%, so most enterprise clients stay on. Now, for the hard numbers, let's talk about the income statement. Total revenue increased to approximately $333 million, driven by gains in subscription solutions and partner revenue. While they are growing, their operating expenses are still very high. They are still involved in Ukraine, and while things are stable right now, it might turn into a bad situation. Their international operations are also exposed to risks such as unexpected changes in laws and trade laws, and restrictions on the ability to reinvest earnings from one country to fund the capital needs of their operations in other countries. That's the end of the report. So what's the takeaway here? BigCommerce is at a crossroads. They're trying to shift their focus to higher value enterprise clients, which could be a game changer if they pull it off. But their ability to grow is hampered by factors outside the company's control, such as a potential wider scale war breaking out in Ukraine, and there are questions about their internal controls and ongoing losses. Their financials show revenue growth, but they need to get their expenses under control to achieve profitability. It's a balancing act between investing for growth and tightening the belt. The transition to the cloud is risky, and it has the potential to make them much stronger. They need to continue to stay ahead of the curve and invest in these new areas. BigCommerce is a company with some interesting strengths, but also some serious weaknesses. Its technology is definitely interesting, but the profitability is lagging. There are serious questions that this company has to resolve before we can consider it a solid investment. Thanks for watching. If you found this breakdown insightful, be sure to hit that like button, drop a comment below, and subscribe for more corporate decoder dissections.